A very good afternoon. First of all, from Bangalore Chamber of Industry and Commerce, I deem it a great pleasure and privilege to welcome Mr. Mohandas, Mr. Ramesh, Mr. Krishnan for sparing the valuable time to be with us today. In fact, this topic from Bangalore Chambers, we thought that this is a time to address this very important topic. We have been talking on several leadership forums and we have been conducting a lot of webinars. But today's one is very, very significant given the current situation and context. Therefore, we thought that we will invite the leaders. In fact, if you look at today, we have three veterans and they're all walking encyclopedias in their own fields. I think Mr. Mohandas needs no introduction. He is a veteran in whatever sector you call it, IT, education sector. And Mr. Ramesh hails from a great organization with wealth of experience. Hearty welcome to all of you, sir. And Mr. Krishnan, he is a veteran in manufacturing, also past president of CII. So, and IMT also is the president of IMTMA, past president. So, we have wealth of knowledge available in this forum. So, we thought today the biggest challenge today is we have no clues on what's going to happen. In fact, when you talk to experts, whatever opinions are coming, they're completely negated, and we are going through a kind of an endless clues. And the challenge is nobody knows what next. And this is one of the worst situations that has happened ever since the evolution of humanity. People say, of course, bubonic plague happened, it killed 200 million in 1300, 1400. But there was no remedy those times. But in the advanced stage, if you look at, I think one of the worst things, and no nation has locked down. I think in the first time in the history of India, we locked down for the first time. Again, lockdown 1, 2, 3. And it continues on, and we don't know what is the next. This is the challenge. And second, the organizations, if you look at, the complete paralysis. I think the big companies, the small companies, the MSMEs, the street vendors, everyone is in a state of paralysis. And nobody has clue what is going to happen next. And supply chains globally, locally, it's completely plummeted. And as big organizations, we're wondering what to do next. In fact, nothing is certain in any region, whatever you call it. And the cities which are doing well, again, they're also in the risk of getting the second wave of COVID. And what next? And hospitals going full and a lot of panic. If you look at the state of Chennai today, I think it's really alarming. In fact, I'm worried whether even testing is happening, and even people tested positive, they're all sent home. That kind of a feeling is literally lingering all over the minds of people. So this is a big kind of complex situation. And migrant labor, I think, is another big topic that has been going on. And whether we could have dealt the migrant labor better, was the right move? I think there's another challenge that's going on. And we also understood how important labor is to revive business and economy. Today, the construction industry has gone for a complete six. We don't have people to, lay the bricks. And we don't have people to do the basic job. And people have gone back, and we don't know when they're going to come and what form they're going to come. So given this kind of challenges, I thought from 6 angles, this pandemic has a big influence on us. One is the geopolitical. In fact, if you look at the nations, there's a lot of, polarity bridges happening. I think a lot of new waves coming and a lot of new thinking in terms of total polarization. And China has taken a big standoff, and how the other world looks at it. Even China and United States, the kind of the peace equations, and Europe and the United States, and also a lot of new geopolitical challenges and tensions are arising. And I think, again, this is disrupting the supply chain globally, which means organizations are moving the supply chain from China to other parts of the world. Again, there are a lot of, resistance. Even we can see the latest thing happening between India and China. There's a lot of disruption to India. I think this is one portion. Second is attitudinal shifts. I think this is giving a completely new way of life, like migrant labor. We never thought that labor would be always a problem, but today it's a completely a new paradigm shift. So what is the post-COVID attitudinal change that's going to happen? Then the climate issue is the third point. I think today people talk about hygiene and pollution. I think the last 2 or 3 months of lockdown has taught us many, many lessons. And today we realized how important to be clean, hygienic, and also from an environmental point of view. Again, so this is going to have a huge impact on the automobiles, the hybrid cars, the electric cars, the fuel cells, whatnots, and even the number of passengers sitting in the car. Even people would prefer to drive their own cars. So it throws a new sets of challenges. Then aggregate demand sector by sector, again also by geographics. Basically pharmaceuticals, health sector, I think IT, e-commerce, they are coming out to be the winners, whereas tourism and hospitality has completely taken a backseat and they are plummeted. So this kind of a new equation, how it's going to change the sectoral way of thinking, and what new avenues organizations should look at, and what new geographics they should look into. And the fifth angle is the new way of digitalization. I think artificial intelligence, robotics, I think this is acquiring a new dimension. I would say that the world is at least going to advance by 10 years in terms of digitalization because of the COVID. So how do you work from home, then cyber security, confidentiality issues, and so the kind of e-data is going to increase 10, 20 times, 100 times. So how do we manage this kind of complexities is another way of dimension. Then, of course, ways of doing business and ways of doing work. Like now we are resorted to working from home. In fact, if you look at the manufacturing industries, we have never been used to working from home, unlike the IT sectors. But today it has taught us a new way of life. I think we found it fantastic. In fact, we never thought that we'd be able to work from home. But I think it's giving us a new kind of avenues and the travel. In fact, we're not able to travel, but travel costs have been significantly reduced globally, billions of dollars. Of course, it is going to affect the tourism and other sectors. Therefore, all these things are coming in combination. Therefore, you name any part of the world, any part of business that is completely paralyzed at this point of time. Having said that, I think all failures, they lead to success. Failure is the stepping stone to success. And most of the important lessons we learn from failures. Therefore, we have today great 3 visionaries and leaders with us. So we are going to listen to their views. And I hope that this session will be a breakthrough session. And I'm sure we will have a lot of takeaways. With this opening note, I leave it to Sekar to take it forward. Thank you very much.
Thank you, Parasuraman. Thanks a lot. Mohan, we welcome you to do your introduction, set the context, Mohan, and make your presentation, Mohan. Thank you, Mohan. Over to you, Mohan.
Thank you, Sekar. Thank you, folks. Good to be here with you. Let me just give you an overall macro view on a global scale so that we understand what we are in for. Next stage. Let us first understand that COVID-19 is something that we are not seeing for the last 100 years. It is global, and all around the world we are seeing infection. It has impacted a larger part of the physical world than ever before in human history. Though the number of casualties are very less compared to the First World War and the Second World War, which is much more global, than people are scared because people don't know when the cure is. There is no certainty that things are going to improve by December or that we'll come back to normal. Normality can only come. Can you folks turn off your mute yourself, please? There's echo.
Can you turn off your video and mute Parasuraman? Can you turn off your video because it gives some echo? Parasuraman, can you turn off your video?
So there's no certainty that this will end by December. So we have to prepare for the long haul, and that's the message. Next. India too had the health impact. We locked in early, and we had lockdown on 3 occasions. But despite that, with people going back, we are now seeing a worsening situation. Every day, 17 to 18,000 people are getting infected. 58% of the population who have been infected have come out and recovered. but nevertheless, economy is down. The only good news that we can see compared to other countries is that per million population, the infection is quite less and the death rate is quite less. The United States is really very, very big. More than 7,500 infected per million population, and nearly today 400 people dead per million population, which is very huge. Even Italy and UK are very, very large numbers. We should not be alarmed by the numbers, but understand how to live with it. Next. It has had an impact on the global GDP. IMF just came around just now to say the global GDP of 82 trillion will shrink by 5.5%. I do believe it will shrink by 8 to 10% because we're only seeing the impact of the second quarter of this calendar year, that is April, May, June. There is no certainty that July, August, September will be any better, even though many countries are going back to operations. IMF says that for the whole year, the UK economy could come down by 10%, US could come down by 5.5%, 6%, and the whole of Europe could come down by 10%. So I think globally, it is going to take us 2 or 3 years to recover and come to where we are. For India, the diagnosis will be declining from 204 lakh crore GDP by 5%. It's the first time that I recall when we're actually declining in GDP compared to the previous year. And this is going to be a tough year because consumer demand is down, people are not buying, people are not very sure, people are locked in, unemployment is all-time high. And if you look at the reaction from all countries, we have seen central banks in the country reduce interest rate, pump in liquidity. The US has reduced the interest rate to 0.25%, UK to 0.10%, EU is nearly negative, and India has reduced to 4%. And all of them are increasing liquidity in the market in the hope that people will get money to run their businesses. In India too, RBI has flooded the market with 8.5 lakh crore of liquidity, and the banks have now started lending based on the government's program of guaranteed lending. Next. So this is a slide which shows you economic recovery will take 1 year. This is an old slide. We should update the figures for the IMF and will show that economic recovery will take 2 years. And I estimate it will take 3 years because we are right now in the midst of it. And I think things will get worse before it gets better. Next. The unemployment situation all around the world is very, very, very bad. The US had 40 million people unemployed, and now some 2.5, 3 million people have got employment. Slowly, people are coming back because in the developed world, what has been hurt is the services sector, retail, restaurants, entertainment, hospitality, tourism, etc. are gone. Thailand had 25% of GDP coming from tourism. That's totally gone. France had 10%. That's totally gone. So I think this has impacted many, many industries. And if you see the slide here, the informal job sector will suffer more from the formal jobs, and all countries are trying to give unemployment doles to people to keep them in the jobs. UK is giving £2,000 up to 80% of £2,500 salary till about August, and the US has sent checks, Japan has sent checks, etc. Next. So this time it is different. Well, every time is different, but this time is really different because it's more pervasive. It is sudden. People fell off a cliff. The economy fell off a cliff. The economy was not in good shape globally before this because we've seen the impact of the trade war between China and the United States, and the economy was coming down. Oil consumption is coming down. And today, global economies are more integrated. Export as a percent of the global economy has gone to 30%. Every country is dependent on some other country. And international travel was 1.48 billion people traveled last year. So I think these are very, very different statistics to show how the world is more integrated. So I think every country will be impacted, and that's the message. Next. And this exposed once again that there's more reliance on China. China is the largest exporter in the world, largest importer in the world. All supply chain leads to China. China makes up 24% of the global manufacturing. And this 24% means in every country, something other is manufactured in China. The supply chain goes to China. So all countries are looking at how to get manufacturing back, reduce dependence on China. So there is a positive news that more and more will go out of China. It is going to take time because China can give you scale. China can give you cost advantages. The supply chain is very, very efficient in China, and they're configured to mass produce. Yes, the costs are going up, but despite this, people have not seen import costs go up, though from now on it may go up. And Japan is spending $2.5 billion trying to incentivize companies to come back. Many of those labor-intensive industries have gone to Vietnam. Vietnam has a border of 1,200 kilometers with 95 million population. So we are seeing a new normal here where there'll be a rebalancing. What this means is globalization is in retreat. International agreements for trade will be in retreat. And once this is over, we may find that many countries have put up trade barriers. So exporting to other countries and travel to other countries could be more difficult in future. Next. Most countries have come out of stimulus. About $9 trillion of stimulus has come. The US has put 3. I would estimate by the time it ends, the stimulus could go up to 15 trillion. The US is looking to come down another $1 trillion stimulus. They want to give everybody a $1,200 check, and they're just printing notes. Japan gave $2 trillion, Germany 1.5, India has given $260 billion. So I think every country is doing that. A large part of the stimulus globally is liquidity in the markets. They're giving liquidity to the central bank, primarily because they believe that liquidity will drive more lending, so people will have enough money to survive, and hopefully they'll come out of it. But the liquidity could also lead to many write-offs in future, which the governments are factoring in. So I think the world situation is very fluid. Next. India has given a 20 lakh stimulus, out of which 8.5 lakhs is from RBI. About 2.5 lakh, 3 lakh crores may hit the budget ultimately. There's a 3 lakh crore guarantee loan for MSMEs. We'll talk more about that in the Q&A session. Next. The oil industry has nearly collapsed. The world was consuming 100 million barrels of oil, and it came down to 70 million barrels. Before that, the US had become the largest producer, and oil went down to $15 for Brent and $10 for WTI. However, it's now come back to $40 because there is sense of normality. They cut 9 million barrels a day of production. But all oil exporting countries are in deep trouble because their budget is fixed at higher rates for oil. For the rest of the year, oil may be around 45 to 50, if at all, unless speculation takes over. And this means that India will benefit a little bit because our largest import is oil, and we have a trade deficit because of oil. However, remittances will come down. Last year, India got remittance about $76 billion. It may come down by $25 billion because there is going to be a reduction in remittance all around the world, and India will be impacted. But the oil industry is in big turmoil, and this has severe geopolitical considerations. Next. The aviation collapse has been something that we have seen. International travel has come to a standstill. All the major airlines are going for bailouts. Lufthansa had a $10 billion bailout, and we are seeing America give $45 billion to the airline companies. And you can see in this chart how Zoom has gone up. There's a great chart to show how digital has gone up, how human behavior has changed, how everybody has gone on to digital, and this will have an impact on businesses in the future, whereas the physical world has declined, and we don't know when these global airlines will come back and fly overseas. Next. The new normal in investment is that people will be trying to raise capital. There'll be consolidation in financial services because of capital. Growth in manufacturing all around the world will happen once things come back to normal, because China will decline. Countries will make sure it declines, and there'll be more of automation and robotics, and the new age businesses will have clear age to profitability because they're finding growth come, and there's no need for them to give subsidies. So new brands will come up, structured deals in finance will come up, and sectors with good risk cushion, who have cash, who are done very well, will come. This also brings to the fore that risk management in business is very important. Those businesses who have kept cash for a rainy day, either in the form of bank lines or in the form of cash in the bank, will continue to do well. I saw a study which said 25% MSMEs don't have cash more than 1 month. Next. So COVID has exposed even the most established industry to chasm. Tech and enterprise intelligence driven resilience will be the most future ready mode to own. So I will end here by just giving this introduction and saying we are in for tough times, and what specific actions to take we'll answer in the Q&A. Thank you, Sekar.
Thank you so much, Mohan, for your elaborate presentation. As usual, we have touched the critical parts of the industry and the COVID. Thank you, Mohan. Thanks a lot. So I'll welcome Pierre Ramesh to give his perspective for 10 minutes on COVID and the industry and profession, and then probably after that we can have Mr. Krishnan, and then we can go to the Q&A. Over to you, Pierre.
Thank you. That was a wonderful and a very exhaustive presentation by Mohan. As always, after Mohan speaks, there is very little to add. But nevertheless, let me try and put in some more elements into this perspective. The reality is, as Mr. Parasuraman said, we are going through not just a health crisis, we are going through an economic crisis as well. And the truth is, nobody, and I don't think anybody there, can claim to have a vision of the future. When this will end, what shape it will take is something we are all still in a reactive mode, trying to be proactive to some extent, but the limitations of visibility, because past is not relevant at all in the current context. Having said that, I think a lot more is blown out of proportion as far as COVID-19 is concerned. The reason why I'm saying this is the situation pre-COVID-19, COVID-19 across the world. The world was already in some way disintegrating. Trade barriers were being put up. Trade agreements were being renegotiated. Parts of the world were slowing down. Indian economy was on a downward slide. Whether we were in denial mode or not is a different subject matter. But the fact is, those trends, and clearly the fourth industrial revolution was the buzzword, and there was a realization that a industrial revolution 4.0 is on the way, where you will see the congruence of the physical world, the technological world or the digital world, and the biological world, and it would disrupt virtually every industry and disrupt countries, economies, and services. This was the scenario pre-COVID. What COVID has done, it has accelerated the pace of the pace. In effect, and second thing what it has done, it is, as they say, when the tide is low, you can make out who's swimming without clothes. And it has exposed the vulnerabilities of organizations. It has clearly brought out in those organizations the deficiencies which had been covered up in good times. And this has actually created a situation where there is now a requirement for introspection by organizations. Having said that, I think the reality is, as an economy or as a country, we have 1/6 of the world's population. We can't forget that. We have 17% of the world's population and 4% of the world's resources. We have many positives, but let us not forget that we keep talking about China, we keep talking about US. China was 13.6 trillion when India was around 3 trillion, and US was 20.5 trillion and heading to by 2030 to 43.7 trillion if all goes well, and China would be 34 trillion. So whatever we may say, none of these are comparisons for us. And whilst we were on a growth path, we were far away from the erstwhile Hindu rate of growth. We were seeing a lot of headwinds. And while some would talk of green shoots in the economy, the reality is that there were significant challenges in the economy then of liquidity. Banks had funds but were not lending. There were serious issues of jobs, which again has been shown up with migrant labor too. There was a demand slump. Pre-COVID itself, auto industry was facing that. Even pre-COVID, many other industries were facing. We had challenges in the farm prices. We had exports slowing down. And of course, we had shortages in many of the critical things like water, etc. So this is something which is a reality as far as a country is concerned. And any industry or anybody operating in India operates in the environment in which this country is, and of course the global environment too. Yet another thing which we need to remember, whatever we may say when we're looking at outcomes, in the social progress index, despite our being the 5th or the 6th largest economy in PPP terms, we were very poorly ranked in the social progress index. In the social progress index, out of 149 countries, we were 102 out of 149. And if you look at the three broad buckets of it, in basic human needs, we were ranked 103 out of 149. In foundations of well-being, we were ranked 109 out of 149. In opportunity, we were somewhat better in 79 out of 149. But if you further drill down, in health and wellness, we were ranked 118 out of 149. Environment quality, pathetic, 141 out of 149. Access to basic knowledge also, we were 99 out of 149. Nutrition and medical care, we were 109 out of 149. I can give you a lot of data as far as this is concerned, but the point I'm trying to make is Let us not measure ourselves in terms of GDP or per capita income or whatever it is. At the end of the day, it has to make an impact on the social progress index. And in the social progress index, we have a long way to go. Now, what has COVID done? As Mohan rightly said, and he made some very, very valid points, the services sector has been impacted. But let us all remember one thing. COVID is not here forever. It will have, at some point in time, it will go. It is this period of time of uncertainty that the resilient will perhaps survive, and there will be many deaths, not only of people, but there will be deaths of industries which we have to be ready for, deaths of service sectors, certain services. And in the long term, the reality will be some services, some industries will fade. Because what this COVID has done is it has not only resulted in people introspecting or organizations introspecting, but because of adapting themselves to the lockdown scenario and all what COVID is doing, organizations have begun to realize that there are different ways of working. Mr. Parasuraman correctly said, even in manufacturing, we never realized we could work from home. Now, when that is it has changed behaviors, and as a result of it, what we will see going forward is not an unwinding of that behavior, but actually carrying forward of that behavior. But the key issue, I think, is a realization that technology will ensure survival. We need to invest in technology. We need to invest in healthcare, and we need this whole thing about self-reliance. We can talk about it in the Q&A session where there will be some questions. I have my own thoughts on that. But the point I'm trying to make is Industrial Revolution 4.0 was thought to be a buzzword, but the hard reality is it is proved now that technology is the only thing which will ensure your survival. Whether it is technology in how you deal with COVID itself, in terms of tracking, in terms of developing vaccines, in terms of developing medicines, or technology in terms of how you adapt yourself to it, in terms of work from home, in terms of technology in education, whole host of things, but it has clearly brought out the need for emphasis in technology. And lastly, a lot of things is happening around the world. We are seeing whether it's Black Lives Matter, whether it is some other issues around skirmishes which is happening. There is an issue of values. We are seeing an erosion in values, and these are not isolated instances. All of these are signals of erosion in values. We need to get back value-based leadership. And I'll close with that particular thing. And let's deal with questions during the Q&A. Thank you very much.
Thanks, Pierre. Thank you so much. Before I request Mr. Krishnan to speak, may I request participants to switch off their video if they're not required, and also on mute, please. Please switch off your camera as it affects the bandwidth and it gives the echo, please. Mr. LK, if you don't mind, can you switch off your video, please, if you don't mind? Over to you, Mr. Krishnan. You can give your perspective, Mr. Krishnan. You've got a lot of experience in manufacturing sectors. You can give your perspective, Mr. Krishnan, then you can go to the Q&A.
Hello, good afternoon, friends. I hope I'm audible enough.
Sorry, Mr. Krishnan, you can come on. Sorry, I realize there's somebody else. Sorry, Mr. Krishnan, you can come on video. Sorry about that, Mr. Krishnan.
I think somebody else is on probably the video. Yeah. Can you hear me?
I'm able to hear you.
Yeah. So good afternoon, friends. And two of my colleagues earlier spoke about the big pictures, what's really happening to a global economy, which is impacted badly by COVID-19. I will focus my entire discussion on what is our own experience as a manufacturing company, as a multinational company, doing a high-tech manufacturing around the world in India. What has been the lessons, what we learned very specifically? I will probably go more inward. The first and foremost, when the COVID news started spreading, our one of the biggest facilities there in Korea, South Korea, the city where our facility is located is the first place which got impacted in South Korea, place called Daegu. So they had the impact of this, and incidentally, the entire period of last 4 months, not even a day has been lost in Korea in their manufacturing facility due to COVID-19. The moment they came to know about it, they went on testing very vigorously and then ensured that self-imposed discipline within the factory, and everybody went to factory and they were carry on with their normal activities without any impact, not losing even a single day because of COVID. Of course, towards the last couple of months, the number of days are less because there is no global business itself has shrunk. That's a different issue because of the reason of COVID. So we had a very early lessons which were coming from Korea as to how they really dealt with the situation. Second important thing, we realized that we didn't know when was the end date for this COVID-19 crisis. We assumed, considering the lead time development for a vaccine or considering lead time development for a new drug and approval and being made available at affordable price across the world could probably be about 18 months or so. We decided that probably we need to prepare a plan which would probably sustain us until end 2021. 2021 end could be probably at the second half of 2021 could be the time. Until then, we need to probably manage ups and downs, unpredictability, and crisis. So that led to an immediate inspection of our balance sheet, our financials, and the way we have run. Being a very conservative company, I would say that we always believed in conserving cash. We never wanted our balance sheet to be leveraged. We did immediately a stress test to see whether in the event we are going to have a depressed business for the next 12 to 18 months, will we be able to pay salary and pay vendors? That was the first stress test we did. And then wherever we believe that we wanted to do a little bit of change so that we are really better equipped to deal with this potential cash flow crisis. So I would say that from the risk management, this was the financial risk management which came first to as a preventive action, that we want to ensure that we are well safeguarded before we get into deeper crisis. We do see organizations where there is a very leveraged balance sheets and where the debts are very high, where the interest as a part of their balance sheet is very high, are having a very tough time to manage with this COVID crisis and resulting cash flow crisis. So I think in the risk management, of course, the cash flow management and managing the unpredictable periods of not 1-2 months, probably periods of 12-15 months becomes a very, very important risk management lesson which organizations have to learn and then gear up. Second thing we got into is that when the business itself is shrinking, for example, manufacturing business over the last, say, 3 months have significantly shrunk. Manufacturing business is probably running at a rate of today 30% of pre-COVID level. When business have shrunk, it is important for us to really critically evaluate our portfolios. When you are running at 80% capacity utilization, well above your break even, there were several businesses which were probably viable to you. You don't mind doing a business at a marginal cost. You don't mind doing some of the businesses even at a small little loss to develop the market. When you are running the plant and your business at a capacity utilization of 30%, it is highly risky to keep several such portfolios in your business. The second important risk management, what we need to probably do as an organization, what we looked at this is, whatever portfolio of business what we are doing, can we afford to continue with all of them going forward, at least for the next 2 years? Do we need to probably reduce the focus on some of the areas where we believe we are not too comfortable in terms of contribution coming from this, and considering that we are probably operating below the break-even point, does it really make sense at all to continue this business? We may not be able to switch it off quickly, but at least it gives you a sense of direction going forward, whether you want to really invest in those lines or you want to probably go slow and then just allow the business to navigate itself based on its own profitability possibility. Third important risk, what we saw was, I think, a lot of disturbance. Please, Shani. Hello. Yeah. So this next important risk, what we were probably looking at is, I talked about the balance sheet, I talked about the portfolios. Third important was, when you are running a business at very high capacity utilization and very profitability, the gut feeling decision making probably was not a very bad thing to do, because you want to be very fast, quick, and then take the market opportunity. Now, a crisis like this, you need to probably look at the decisions more and more driven by very well articulated, analyzed data which is coming from your business. So embedding digital and analytics into the business and every decision making during crisis time is extremely important. Fourth dimension of our learning is, how do we keep our customer engagement still alive? We are not able to visit customer, we are not able to do many things, but we did several innovative things over the last, let us say, 2.5 months to ensure that our relationship with customers at an individual level as well as at an organization level kept high by initiating several initiatives of engagement digitally. But if you ask me a question, does it really make up for our personal engagements? Does it 100% make it up? No. But at the same time, you still are in touch with customer. When the situation changes, probably you're in a better position to deal with the business. You are in a more advantageous position to deal with the business. Next aspect of, when we were reopening the factory, the first and foremost thing came to our mind is, the safety is no longer the safety the way we were dealing with. The safety here is much bigger, more complex dimension of safety we are talking about, which means that employee starting from his home, coming to factory, going back home. The entire paradigm was, under the earlier, your thinking of safety was more at the workplace level, within the factory premises. How do we deal with this safety? But today, the safety envelope has significantly progressed to a much larger extent. So safety became another very important risk management perspective, which organizations probably will need to look at it much more focused manner in future. Next important aspect of this is, when we were challenged with, you need to run your factory with 30% of the people, when we did an analysis as whom we really needed the factory to run, we of course need the operators to operate the machines. Theoretically speaking, we can say that we don't need anybody other than people to operate the machines. All other people can theoretically, if we are really digitally enabled, can work from home with minimum supervision possibility. This was another very important lesson we learned. We experimented, including some of the engineering activities we could remotely do, because we, over the period of time, we had made enough amount of investment in digital technologies. So we could run, in other words, we only had the operators coming with minimum of 1-2 managers to manage the facility. Rest of them were not really coming every day to factory. They were working from home, and we could manage them without big compromise in terms of productivity. Now the challenge for our team is to see what can be done to ensure that if there is another crisis on and off coming during the course of the next 18 months, can we really run the factory only with the operators coming to factory with minimum supervision? All other people work from home. This is another lesson which we have learned. Next important lesson, what we learned in the whole exercise for leadership was flexibility. When we opened the factory, we were not sure as to what level we should produce. Should we go back to pre-COVID level? Should we start at a lower level? So first thing we said is, we should ensure that all processes are up and running. They are running very well and efficiently. Once we know that processes are running efficiently, we said now we will not go to the pre-COVID level in one jump. We are only going to go based on what feelers we are getting from market. And market feelers were very mixed. Customers in Chennai started working, suddenly stopped working. So we had to quickly adjust our production to take care of various vagaries of the market, and we need to prepare ourselves to deal with this situation in a flexible. In other words, another important lesson for the leadership post-COVID situation is how do you build in high amount of flexibility in your organization to ensure that you can really regulate your production to meet the changing, ever-changing demand of market. I would say these are all some of the major lessons we learned. I don't think we have really become very, very efficient and specialist in all of them. But nonetheless, this has opened up all these risks which probably were not getting attention as much during the good times. COVID has opened up our eyes. I'm sure at the end of this 18 months crisis, we would be a more better, more professionally organized company to take care of some more shocks in future. Thank you. I'll take rest of it during the question and answer. Thank you.
Thank you, Mr. Krishnan. Thanks a lot for your perspective, particularly the lessons and how you managed to overcome that. Thank you so much, Mr. Krishnan. Let me start the Q&A session. Let me go to Mr. Mohandas first. Mohan, we have read your articles in Indian News Journal as well as international journals on recommendations to the government and what the government should do. And government has also come out with the stimulus package of 20 lakh crore called Atmanirbhar. So, Mohan, in your view, whether the package announced by the government, is it sufficient for the industry to motivate itself and to come out of it? And what are the areas that the government has missed in this Atmanirbhar package, Mohan, in your perspective, what the government should do, Mohan? We need your perspective, Mohan, if you don't mind.
Thanks, Sekar. You see, the government has done a few things which are good. It has taken care of the bottom 65% of India's population. Make sure they get rations, they get gas, they get some money in the bank, and things like that. Now they got the Marega program, they got that new program for 50,000 crore for migrants who have gone to the North Indian states, which are labor surplus. So they're taking care of them to do the work. They're taking care of liquidity of industry and MSMEs by having that loan guarantee scheme for MSMEs to a large extent. They reduce the interest rate to make sure more money is available and liquidity is available. But the biggest issue today is demand compression. Where is the demand? Everybody has gone into a shell. And if there's no demand, you can't produce, you can't sell. And if you can't sell, there are no revenues to lay off people. It's a vicious cycle that goes on. And for that purpose, I think there is a need for government to start large-scale infrastructure projects. Yes, there is a 4 lakh crore investment that is happening today, basically in road building, in the railways, and in other areas. But we need much more. We need large-scale infrastructure programs, and then we need a large-scale, possibly reduction in taxes in certain areas, like automotives, where people can be given, let's say, 3 months time when it's slashed, so the demand is created. Because if we don't do that, there is going to be no demand, and that has great backward linkages. Another issue is real estate. Real estate is the doldrums. Now, most of the housing construction and most of the real estate construction is come down. Housing is in great demand, and there I think there's a requirement for loan restructuring in a very big way. It was already there on the cards before COVID when 25,000 crores was set apart. But I think that is not working so well. We need much more. And for that purpose, maybe all state governments should reduce registration charges to 1% for the next 3 months so that people can get cheap loans to buy houses. And existing stock, about 7 lakh crore of housing can be taken off the books. And that money going back to real estate companies will revive the industry and start construction again. So I think there are 3 or 4 areas where the government has to work on demand, generating demand. And the last point is, I would urge that we must abolish long-term capital gains tax. If you look at the figures for financial year 17-18, you will find that the long-term capital gains tax income was only 65,000 crores out of 45 lakh crores. Because we need investment in technology, we need investment in startup, we need investment in new companies. And for that, if we remove the long-term capital gains tax, both for equity, for debt, for all of the assets, I think it'll kickstart investment, kickstart people buying. And let me give some examples. We got a lot of gold, 30,000 tons of gold. Abolish long-term capital gains on gold. Let the gold get recirculated. Let money come to the market. Abolish for stocks. Abolish long-term capital gains for real estate. Abolish it for land. Abolish it for investment in other securities. You're able to do that. That will create a feel-good factor, and that will possibly reduce the cost of operation. Government is not going to lose anything because the total tax of long-term capital gains is maybe 12 to 15,000 crores on the total collection last year, or something like about 10.5 lakh crores. So I think these things have to be done. The biggest of which is creating demand. The private sector by itself cannot create demand because people are still scared. There has to be a lot of public spending. Some people say that the fiscal deficit is going up from 4% to from 3.5% to 6% for the government of India, and for the states from 3% to 5%. That's true, but that is going up because there are no tax collections. So spending will remain the same, and the spending is not going to create a new demand because they're all maintenance spending. So new demand will only come if you invest in infrastructure, which will lead to more cement, more steel, lead to more labor being employed, more roads getting built. So I think it's a time for a very big program to come. And if there's no capital, I think the government should go overseas and float bonds. Why don't we float $100, $200 billion bonds long term, because interest rates have crashed. We will get it at very cheap money, and we can float bonds for 20, 30 years. If the government doesn't want to do it, the parastatals can do it. Yes, they will come back and they will stay with the RBI as foreign currency reserve. That is fine, but money will be available, so RBI doesn't have to print more notes. So I think we need to have a bigger program now that we are in the new normal.
Thank you, Mohan. I have one more question, Mohan. A light question to you, because I know your passion for startups, and we know all of us, or most of us who has been interacting with you, know your passion for startups. Under the current situation, COVID situation, Mohan, where do you see the startups leading, and what is your take on startups, Mohan? And what is your advice for the startup companies, Mohan?
You see, my advice to everybody, including startup, is please get into survival mode. What is survival mode? Survival mode is making sure that you have enough cash to survive for 1 year. Now, you have only a limited amount of cash, so what do? Cut all the costs. Don't lay off people, because I think, in this cruel times, if you lay off people, is going to cause great pain. Cut salaries for senior people, cut everybody's costs, and bring it down to a bare minimum just to be in survival mode. Cut all fixed costs to make sure that you can stretch your money as much as possible. Talk to your investors and help get some liquidity support from them. Talk to bankers and get some working capital loans if you can, if you got current assets. So get into survival mode. Second, I would say is look at your entire business and see how you can take advantage of the new normal of the digital economy. So see that you reach customers, you're able to make people buying your stuff easier, ensure that the technology actually works, the processes work, and make sure that you're much better. And the third thing, which is very, very important, is look at disruptive models that you may think of, because when COVID has disrupted existing models, new models are coming up, and get to go there. So by doing all these three things, that is, stretching your resources to the maximum at least for 1 year, making sure you redo your technology and do all the process improvements that are important to reach your consumers, get new consumers on board, and then look at other disruptive models which can help you grow the economy, you can possibly survive and wait for things to happen. And if you're able to get traction, talk to investors and raise capital, because investors are looking for companies which are seeing scaling up. We saw Beiju raising capital at 10.5 billion because he's in EdTech, and we've seen a huge surge in interest in EdTech. So in the digital world, I would urge all startups to have a look at this. And if you find that things are not going to work, get into a hibernation mode where you just shut down for some time and come back when things are better.
Thank you, Mohan. Thanks a lot, Mohan. And I'll come back to you after after a couple of questions, Mohan. I wish I had a couple of questions for you. I'm going to Mr. Krishnan, right? Mr. Krishnan, probably I just want to ask you, in this challenging time, Krishnan, one of the key challenges that organizations will face is to motivate and retain the top leadership, because this COVID, as you rightly said, it's a big crisis that is affecting the corporates and the performance. And one of the big challenges is to motivate and retain the top leadership of an organization. So what is your take on that, and what is your advice for the corporates to retain the top leadership, Krishnan?
Well, motivation is first of all, I think the leadership challenge for motivation start with all of us. We need to first of all find energy to motivate ourselves. It's very, very critical for leadership to first of all remain at an individual level, at a professional level, as a high energy demonstrating person during this crisis period. We need to be completely energized. It is really depressing to see a factory not working for 2 months. You're not able to take care of some of the simple things. It can really be demotivating. The first lesson number one is that we must demonstrate a high level of energy in ourselves and reasonable level of confidence when we are interacting with our team. We know that this is going to also pass. While we need to tell them that, look, your organization, your business is built on strong foundation to sustain such a passing phase, even if it lasts for about 18 months. But however, this is not going to be easy. It is going to be extremely challenging the capability of each one of us if we can only minimize the loss during this period. If you can only all the time operate every single month without losing cash in the business, that's the challenge for the leadership. This challenge itself, if communicated appropriately to the managerial team across the company, it's an adequately motivating challenge. I'm very sure that most of the leadership people in the organization, it's a challenge which they would never probably have seen in their life, which they may not see it in future. So it's a real challenge, real life challenge, which they need to deal with it. I'm sure that if we are able to clearly tell the strength of the organization and how we are geared up, as well as what we expect from them to tide over this crisis in an appropriate fashion, I'm sure that our team will get motivated and rise up to the occasion. Thank you.
Thanks a lot for the comments. I'm going to Priya right now. You raised that point in your presentation, and I also have a question related to that. One of the challenges for the corporates in the post-COVID-19 scenario will be the pressure on the top line and the bottom line. And most of the companies will be facing challenges and the pressure in both the financial and the non-financial metrics. So there must be a level of transparency, and most of the corporates should also enhance the level of transparency. So, Pierre, definitely I can count on your experience to talk about it. So, what are the new levels of transparency that corporates may have to undertake post-COVID, and what steps the corporate should actually take to achieve or enhance the value system as well as maintain the ethics in the value system, Pierre? What are your thoughts, Pierre?
Yeah, thank you, Sekar. Few things. I think we have to realize that during this crisis, the information or accurate information is the key. If we do not have right information, our decision making will be inappropriate, and what you communicate to the outside world will also be inappropriate. But more importantly, the actions which you take on the basis of incorrect information or incorrect data will result in further impact as a result of the crisis. But in this situation, traditional measurement matrices are not relevant. Organizations have to realize that it is not about profitability or growth alone. The usual metrics are not relevant at all. What is relevant is outcomes and not outlays. It is no longer about reporting, what we have done in terms of what we have spent, etc. We need to be able to determine what are the outcomes of it. And we have to realize in a crisis time, usual timelines are not the benchmark. There needs to be a sense of urgency which organizations need to demonstrate. And in this situation, of course, there is the usual saying that ends don't justify the means, but initiative should be encouraged, recognized, and rewarded within the value boundaries, of course. And the approach has to be on inspiring the entire organization. So we need really inspirational leadership. And this is not the time for leadership by consensus, but decisive leadership. But you asked the question in terms of transparency of reporting. And in my view, I've seen quite some reports in recent times where even SEBI had asked for information of the impact of COVID-19 to be disclosed. I'm sorry to say that has been very, very sketchy in terms of what organizations are doing. But will that disclosure solve the issue? The answer is no. But what is important is it is time now for an organizations to actually bring out to the outside world their vulnerabilities. As I said, when the tide is low, that's when you know who's swimming without clothes. It is now for our organizations to reveal. It's not the usual risk management risks which our organizations used to put out even in their annual reports. They should clearly bring out those risks, those elements which they are vulnerable to, and how those vulnerabilities have been exposed in the context of COVID. And I think that is what I would define as, in a way, value-based leadership. Because what is it you stand for? How is your organization living those values? And bring out to the outside, communicate to the outside world the effect of your living those values. Thank you.
Thank you, Pierre. Mohan, are you there, Mohan? Got disconnected, I saw. Mohan, are you there?
Yeah, I'm there.
Okay. Mohan, I just, okay. Mohan, since I know very well you are also part of corporate governance committee along with PRR. So I wanted to pick up your catch, Mohan, on the same question, what PRR has talked about it, on the transparency and what the corporate should do to enhance the value system, Mohan. I want to pick up your thoughts, Mohan.
You know, Sekar, my view is value system in a corporation comes from the leaders. You have to lead by example to demonstrate the values are lived values. The values are not merely on paper. Now, if you have a differential system where senior people get all kind of privileges, others do not, it's not going to work. For example, in hard times, senior leaders have to take a deep pay cut and tell everybody that we are in pain, I'm tightening my belt. Suppose you're getting suppose you're getting 2 crores. You say, I'm going to take a 5%, it makes no difference. Cut that 2 crores to, let's say, 50 lakhs and say, look, I've taken a deep cut. Yes, I'm still making decent money, but I've taken a deep cut. That's one. Second, don't have special privileges for senior people compared to everybody else. In the office and the workspace, no separate toilets, eating in the cafeteria, following the sale rules. Third, make sure that you do not use the corporate resources for personal purposes. Fourth, you follow all the rules. Don't have separate rules for yourself. So once you have leaders who lead by example and have shared values, then I'm sure the value system of the corporation will work. And then have a no tolerance policy for certain things. For example, defalcation of money, sexual harassment cases, or anything like that. Educate people, train people, but make sure that you have a zero tolerance policy so that anybody who are high will be subject to the same rules. And the old saying in law, be you ever so high. Remember, the law is above you, right? And I'm sure so many of us here, I'm sure Ramesh, you, I, and many others, Krishnan, etc., we all do that. And for us, the value system is real. It is there, and is a part of how we operate, is a part of what we do, and we don't know what else to do. I remember a conversation Narayanmurthy long back when he came back from a NASCOM meeting. He was telling me, Mohan, some people told me that under the head loans in advance, the balance sheet, people give money to all kind of people and take the money out. So what is your view? I told him, sir, I was dumbfounded. Why is he asking me this question? So I told him, sir, we have never done anything like that. And I told him, if the thought of doing wrong doesn't come to mind, you'll not do wrong. So for so many of us who are brought up with good value system in our houses, who practice that as part of our living, the thought of doing wrong doesn't come to mind. We believe in Papa Punya. We'll not want to do Papa, so we'll not do wrong. And the thought is not there. We can never do wrong. So I think it's very important that values are done, etc. Even in the Institute of Chartered Accountants, Sekar, you know that when the Satyam thing blew up, I had called upon the president to take action immediately, because all professions get respect from the public only when they ensure discipline and they stand up for the highest set of values. So respect in society comes to those people who follow the highest ideal of values. And in our society, Sekar, you'll know that the scholar is placed on the top of the totem pole, not the warrior. In all other cultures, the warrior is at the top, the king is the top. In our culture, the Rajguru, a person who is wedded to knowledge, who may live in poverty with nothing no assets on his own name, gets the highest amount of respect and everybody respects. So why do we do that? Because we believe values are important. The object of life is very different from acquisition of wealth. Acquisition of wealth and having a good life is extremely important. But without values, we look down upon people who do that. So I think it's a lived experience and we have to lead by example.
That was a fantastic. Thank you both to Mohan and PLR for elaborating that particular point. Mr. Krishnan, I have one question to you. One of the new normal in the post-COVID situation is a work from home and virtualization becoming a reality.
Yes.
Which is completely different from the past. Now, in the new work from home and the virtualization, what the corporates, organizations should do to bind the customers and the employees together, Mr. Krishnan? What are the few things that organizations should do in your experience? And in
So
your
first,
assessment?
first of all, it is extremely important. The entire organization, which is manufacturing, sales, engineering, all the functions of the organization need to operate on one easily movable, navigatable platform. It's critical. Most of the legacy, let's say, digital systems in several organizations, finance operates in one kind of one, and let's say engineering operates independently, quality has its own system. So over the period of time, we went on to adopt ERP systems in organization. Even with ERP, there are several very specialized systems were not very well integrated. Organizations need to ensure that they have digital infrastructure which seamlessly enables the employees who are working in different departments able to navigate through the system and get the data what they really desire. Many times, if you really look at the meeting necessities in typical manufacturing organization, 70–80% of the meeting is to disseminate the same data to all the participants. Maybe 15–20–25% of the time you discuss about the outcome. What is the decision you want out of the meeting? If you are able to build a digital platform in which people are seamlessly able to navigate and get the right information for the decision making, meeting content itself will probably come down from, if it is for 1 hour, it will probably come to 15 minutes. So this is a very important investment organizations to make. Second important investment organization need to make is the sales and customer facing functions. Customer facing functions for a very long time in typically a manufacturing industry as well as industrial marketing industry was always a face-to-face effort. This industrial marketing and marketing of industrial products by and large was one-on-one face-to-face meeting and discussion. This would probably become the most difficult part of when we come out of COVID-19. It would really be the most difficult thing to crack. So organization needs to really find out, how do I ensure that my customer engagement and customer experience is not, if it is not 100%, can I aim using digital technology going up to 80%, 85%? Progressively can we measure? Keep on measuring what is the shortcoming I have with the current digital methodology over the one-on-one meeting, and then keep filling the gap so that we are fully prepared to ensure same level of customer engagement even with digital tools. Third important thing is we should find a very two-way communication methods with our employees. In digital working, the biggest problem is you don't have a face-to-face meeting. You don't meet somebody in a cafeteria. You don't have a tea with somebody. So the gaps are likely to increase between individual to individual. We need to find a way as to how do we ensure we build a two-way communication channel with our employees, even if we are remotely working, so that the gaps are not existing. We don't really miss the communication of other side of the people. It is not one-way communication, only management communicates to the people. We want people to give their feedback back into the system so that we are able to take those feedbacks and make our decision making and policies much better. So these are all the three, I would say, different aspects. We need to, one is digital platform wherein people can seamlessly migrate. Second is customer experience. How do we really bridge the gap and bring it very close to the one-on-one meeting level? Third is how do we establish one-to-one communication, two-way, with employees in the organization to listen to them. Thank you, Ramesh. Thank you, Sekar.
Thank you. My next question is to both Mohan and PR Ramesh, because I know both Mohan and PR Ramesh have passion for the independent directors and the corporate governance. So, Mohan, the question to you, Mohan, and probably I'll ask PR comments also. In the post-COVID situation, definitely there will be a lot more challenges for a lot of sectors for survival and the recovery also. And independent directors and the nominees have got a bigger responsibility in the board to play. So what is your advice to those independent directors, and how do you think they should enhance their functioning in the board, Mohan? What is your thought, Mohan, on that side?
Sekar, my view is directors become very important on 3 or 4 occasions. First, when there's a crisis. When there's a crisis, they have to take charge and they have to lead. Second, when there's a CEO transition. So they have to come and they have to make sure the leadership changes take place. Third, when there is a regulatory challenge for whatever reason, then they have to step in and change. And fourth, when there's a need for redoing a strategy, because ultimately the strategic direction has to be set by the board. Now today, point number 1 and 4 are very important because there's a crisis and there's a need for a strategic direction. So my advice to all independent directors is, please talk to company management, ask them to relook at the business, guide them, and see how do you come out of this crisis, plan A, plan B to be put into place, and make sure the company is safe and monitor it every 15 days. And 2, make sure that you have full disclosure to all your investors. Have investor calls, talk to the market, talk to everybody, and say, this is a crisis, this is what our expectation is, this is what we see at this point of time. We'll come back to you maybe a month from now, 2 months from now, or earlier if you see any radical change. So communication, communicate to all your stakeholders, including your employees, as to what is happening, because you got to keep the morale high. And you got to make sure that whatever pain is there is equally shared by everybody, because everybody has to stand together. And for that, the independent directors and the board have to lead the way. And then for the long-term health of the corporation, get into reviewing your strategy. What has worked in the past? What has not worked in the past? How is the new world going to treat you? What are the changes that are going to come? What could be the impact? Talk to people, listen, and talk to their management and see whether any change in strategy is required. So I think all these things have to be done by the independent directors. And my advice to them is to get very active, get on calls to the management, and start driving all this. I'm sure the management will respond, and then monitor the progress so that you can take the company through this crisis till things improve and you go back to normal. Because in the crisis, your qualities of leadership come to the fore, and it is in a crisis when the independence of the independent director and the independent director are needed the most.
Thank you, thank you. Can I have your comments, Pierre?
Yeah, I think Mohan has very, very rightly laid out all the points in relation to this. But I would like to add to say that the shift has to be for an independent director from focus on compliance to actually focus on strategy, as rightly Mohan said. More importantly, this is the time where an independent director has to, work with the management in addressing the challenges which this current situation has posed. It would mean clearly identifying all those elements which contributed to success and test whether those elements will be relevant in future. If not, how the organization is going to cope with it. Identify all those risks and vulnerabilities and understand how organization is dealing with it, and bring in your own expertise in assisting the organization to deal with those vulnerabilities or risks. Third is focus on the investments in technology by the company. How is the company trying to remodel itself to become far more technology proficient or technology intensive, if I may use that term. And fourth is clearly look at do a scenario analysis as to what the future will look like, not only in the industry in which the company is operating, but in the overall environment, and develop those strategies, including the plan A, plan B, plan C, plan D, etc., for the future. And fifth, remember that what happened now can happen again, whether it's a pandemic or an economic crisis. What are those lessons which one learned now? How do we ensure that we are better prepared and more resilient in the future? Thank you, Shri.
Thank you. Krishnan, I have one question to you, Krishnan, which has come from chat. There is one other point which I also want to ask. How do you improve the employee engagement in this crisis? And is there any specific areas that you would recommend to the organization's employee engagement, Mr. Krishnan?
Yeah, so the first is the employee engagements are, let me put it on 3 different platforms. One is, number one, we need to, during this crisis time, it's important we have communication with the employees to ensure that at a personal level, somebody is talking to them to ensure that they're all safe, they're all well taken care, their family is safe. This is at a very, very personal level, which is extremely critical for the individual to make them very important to feel that, yes, I'm safe, there is a concern in my organization about my welfare, my family's welfare. This is one set of communication, set of people should be constantly talking to people to understand whether they are safe, are there any feedback, our families are safe, any help they require from company. This is one level of, let's say, communication which certainly will bring employees to your fold. Second important employee engagement aspect is retraining of employees. This is, I think, probably the window what we had for a period of almost 2 months, or maybe 6 weeks or 7 weeks, was a wonderful window available for us to really retrain our employees on several subjects which were not directly related to them, but very relevant to them. Knowing them probably makes them a better employee when they go back to their work. So we did a lot of work in terms of training of employees during this period of time. When we did training, we also recognized that this is probably a more practical way of training our people than our existing classroom method of training. So probably we are now looking at a way to regularize in the organization this training system, whether there is a COVID or no COVID, becomes an ongoing in a digital convenient platform where our employees at any point in time able to choose the subject they learn and then get on the part of our employee engagement is very critical to really look at business-based discussion, which means that I'm sure that every leadership in the organization, whether it's the top level or middle level, is facing several challenges during this COVID-19 crisis. Assuming all the answers are available with us to all the problems with ourselves in the managers community or leadership community is not really correct and true. Probably there are ideas that can come from people down the line. How do we escalate these problem statements to many people across the organization and seek their participation, seek their ideas and views as to how we can overcome? I believe these challenges, when it is opened up to the entire organization, across the organization, will really increase the challenge level, will motivate the people and increase the customer engagement level within the organization. Thank you, Sekar.
Thanks a lot, Mr. Krishnan. Here is a question to you. A lot of us are aware that you have been advising the government on changes in the corporate law through CIA and your individual capacity and through multiple ways. The post-COVID scenario, is there any regulatory relaxations for corporates that government should introduce to facilitate the functioning? Where the government has promised to decriminalize some of the provisions of the Companies Act. What are your thoughts on easing of some of the regulatory challenges for the corporates in the post-COVID scenario, PRR?
Yeah, Sekar, I think you used the term decriminalization of the Companies Act. I think that was independent of the current situation, COVID situation. What is important at this time, and which the government has already acted upon and is continuously monitoring, is the relaxations in terms of compliance. Not waiver of compliance, but relaxations in terms of timelines, relaxations in terms of certain provisions of the Act which could come in the way of your compliance, for instance, holding of board meetings, holding of audit committee meetings, passing of resolutions by circulation, or passing of resolutions by video conferences, etc., or holding of EAGMs, as the case may be, including the timelines for preparation and finalization of financial statements, many other timelines where insofar as returns are concerned. I think that is absolutely critical, and which is what the government has done. In effect, it means a realization that because of lockdown and other situations, there is a challenge insofar as meeting the compliance requirements. And government has already done it, and I think is continuously monitoring that. But I don't think the government should do anything which otherwise is independent of the COVID-19 situation, and try and give those concessions in when those are not really going to have any effect insofar as the corporate performance or shall I say hindrance in any way in terms of coming out of the current situation. Thank you, Shri.
Pierre, Mohan, and Krishnan, I have two questions which I need a views of all three. Probably have 10 minutes time. So Mohan, the question to you, then I'll ask Pierre and Krishnan for their views, Mohan. In your experience in the assessment, Mohan, after the COVID, what are the two areas that you would suggest for the corporates and the organization, the business community, to build and take care of, so that we can build a resilient leadership in the future? And what are the two areas that you would suggest, Mohan, after the COVID experience?
Again?
In the post-COVID experience, Mohan, we have again a lot of experience and knowledge about that. So what will be the two areas that you would suggest to the corporates to take care in the future, so that they build up very resilient leadership in the future, Mohan?
Well, I would tell the corporates that you must put in a process of stress management in the enterprise, because today post-COVID, what has come to is black swan events may become more frequent. Why am I saying that? Well, we saw this pandemic. The pandemic came out of nowhere. Two, we have seen the impact of technology and the rise of digital monopolies, and that's going to expand. We have seen globalization take a retreat with the countries putting up barriers. We have seen the rise of China and the impact it has had. We've seen the rise of Chinese hegemony and the threat of violence from the world, like China is doing on the India borders. And we are seeing the decline of Europe. So we are in for the next 20 years in a very, very volatile economic and social and political environment. We're seeing the decline of the oil economies in the Middle East. We don't know how that will turn out into a social issue. And we're also seeing very clearly the US is no longer the great country it once was. It is driven by internal strife. It's driven by society breaking up into bits. It's driven by the loony left coming up. And we're seeing all over social groups trying to impose their views on society. Now, in this kind of an environment, and India is not going to escape that. India is also part of the world where everybody is interlinked. In this kind of environment, we have to be focused on making sure that enterprises can withstand all kind of stress. So do a little bit more scenario planning, stress, etc., to find out how we will stand up in some kind of stress. Second, put in place a financial restructuring program to create liquidity in your enterprise. Always keep 1 year's money, either in the form of cash or in the form of bank lines available to you, because most companies in India have been used to living hand of mouth financially. They're not seen any crisis, and now we are seeing a crisis. So reduce your leverage, sweat your assets, and make sure that you have enough liquidity and look at bank lines to come up. Third, make sure that you make your people more productive by using technology, by reducing the tyranny of processes in the enterprises, and making sure that the focus is on clients rather than internal managing internally. One of the big challenges enterprises face is when you become bigger, you spend more time managing internals rather than looking at the external world, and the external world may not be as benign as it has been. So make people productive, because in the real world, there are only two things that can create a sustainable competitive advantage: capital productivity and labor productivity. Become productive in capital, become productive in labor. And four, next, reduce your fixed costs. Reduce your fixed costs so that you are not overexposed, and you can always reconfigure business, because business models will have lower mortality. Lower mortality in the higher mortality, in the sense that lower life, that means that models may have to change. And every time a change takes place, you have to reconfigure and face the market. Last point, make sure you have a top-class board with people who know how to link the macro to the micro, people who know are independent, will talk back to you, and people who are well aware of what is happening, so you get the best kind of advice. So I would tell all corporates, the world is not the same again. There's greater volatility, greater mortality. All the things that we grew on could be in retreat. So beware and be ready with for managing greater risk and greater stress.
Thank you, Mohan. Thank you, Mohan. Pierre, what is your advice, Pierre? What's your text, Pierre?
Yeah, and Mohan has laid it out very well. Clearly, business continuity plans need to be reviewed. It's no longer in the context of the past, the way things were, the way risk management was drawn up, the heat maps were drawn up. Today, what we are seeing is completely different and has never happened before. More of this is likely to happen. Having said that, there are two things. Since you asked only two, there are a number of things which Mohan has listed. Clearly, we need to look at the readiness, or rather the technology plans of the company. The future will be technology driven, and companies, they cannot live in the way they have been operating. They need to relook as to whether their business will be relevant in the future. How do they adapt themselves if similar situations arise? The second one is people. This is the time where companies would have realized who their passengers are and who their real drivers are. And that is the analysis which not only they need to do, but also get rid of all those passengers and have a workforce which is capable of meeting such challenges and being able to sail through these difficult times, even if they arise in future. Thank you.
Thank you, Pierre. Krishnan, what is your perspective, Krishnan, on this for this question, Krishnan?
Hello. Sekar?
Krishnan, can you? Yeah, please go ahead, Krishnan. You can respond, Krishnan.
Yeah, Sekar, can you
Krishnan?
repeat the question?
No, we have a lot of experience in the COVID situation. Post-COVID situation, what are the two important points that the corporate should follow to build a resilient leadership in the future, Mr. Krishnan?
Yeah, I think the leadership challenge now is, like I mentioned before, the risk management becomes number one, the most important agenda on the, let's say, action plan of senior management team, leadership team in any organization. The risk we have seen in the last crisis, financial market meltdown, and during the pandemic, we have seen the kind of crisis we see. While the risk management, what we have generally been talking about, is more related to transactional and businesses, etc. It has never been as deep as what we have really seen during this pandemic. The event which is happening in some part of China is how it could probably wreck your entire business, and so I believe the risk management at every department level, every function level, every decision-making level should become a very important aspect of discussion within the leadership team through the year, not only during this time. This is a lesson we need to carry, and culture we need to build in the organization. While so much of risk we talk about, we should not leave our ability to take business risk for the business. We need to retain our ability to take a meaningful business risk to further our business. At the same time, risk management should become a very important part of our agenda within the organization. Thank you, Sekar.
Mr. Parasuraman, before we wind up, you have any point of Parasuraman from the panelist, Parasuraman?
No, I think, thanks, Sekar. I think it was a wonderful discussion today. In fact, I would call this as a total organ failure situation. Normally, you have a kidney problem or a heart problem, you have a solution. Doctors do the operation or remedy. Today, we are in a situation of a total organ failure where you name any industry, any sector is completely in doldrums. So I think today we could hear to the viewpoints of all these leaders. And I think I also feel that the human development, I think rightly said by all the eminent speakers, I think today the passengers and the drivers, I think that is going to be the real game changer. In fact, Swami Vivekananda said, you give me one person who is pure, I'll change the rest of the world. I think this is the time that we find out that single person. And in fact, I was listening to Mekin Mageshwari, we were discussing of Flipkart. He was telling that in most of the organizations, 95% of the value addition is done by 5% of the people. I think it's very, very important to take care of such people and such organizations flourish. In fact, it was a big shock to me because normally in Toyota, we believe that it's 100% and everybody needs to be motivated. But I think companies like Flipkart, where people keep changing every year and every 6 months you see a new set of people. I think we are posed to such kind of situation today. That's why I call this as a total organ failure. I think a new breakthrough, new paradigms, and new ways of managing business. I think it's an ever-learning process. I think so. Probably our learning process is ongoing, and I think today was a fantastic set of discussions and a lot of value add to all our members. Thank you so much. I need to sincerely thank Mr. Mohandas Pai, Mr. Ramesh, Mr. Krishnan, I think for their valuable insight and contribution today. And thanks a lot, sir. Thank you so much.
Thank you.
Folks, thank you very much.
Thanks, Mohan. Thanks, Krishnan. Thanks.
Shekhar, only one suggestion. Can you have a kind of a selfie?
Thank you.
Like with all the...
Sorry,
can we have a picture, all of us in the video? So that it's a kind of memorable picture for Bangalore Chambers.
Mohan, can you just switch on your video, Mohan, if you don't mind?
Yeah, I'm here. Who's going to do the video?
Parasuraman, are you going to take
I will take it in my iPad. I will take it in my iPad.
Okay.
People have to be centered in the frame. Narari has to be centered. Ramesh, you are there. Ramesh, you are looking good. Sekar, the light on your face. We need light on your face. You are dark. Go back a little bit. Go back a little bit, Sekar. Yeah. Parasuraman is looking good. The light is okay. Okay, go ahead. Take the thing. Krishnan, just go back a little bit. Krishnan, go back a little bit. Yeah. Light is better. Okay. Somebody's taking a film. Camera.
Yes.
Take a photo.
The iPad, it's iPad, I just take a selfie.
Okay. iPad adjusting. Okay.
Yeah. Once again, last shot. Thank you so much. Thanks a lot.
Thank you.
Thank you. Bye-bye. Thank you. Bye-bye, everybody.
A wonderful evening, sir. Thank you so much. Thank you.
Thank you.
Thank you. Bye-bye. Bye, Ramesh. Bye, Krishnan. Bye, everybody. Bye, Sekar.
Bye, everybody.
Thanks, Sekar. Thanks for excellent moderation. Thanks a lot.
Yeah, thank you.